Is China on the brink of economic collapse? The world is watching closely, and the ripples are already being felt in Africa. China's economic growth has slowed, but it's not all doom and gloom. The country is undergoing a major transition. This transition is driven by domestic challenges and geopolitical tensions, especially with the United States. China's new development model aims for quality improvement, reduced carbon emissions, and innovation in high-tech industries. Despite the slowdown, China remains Africa's largest bilateral trade partner, with trade volumes reaching a historic high of $282 billion in 2023. However, there's a massive trade imbalance. China exports more to Africa than it imports, and this dynamic is shifting. African exports to China are still largely unprocessed commodities, but the composition is changing. China is sourcing less crude oil from Africa, turning instead to more predictable supplies in the Middle East and Russia. In contrast, African mineral and metal exports to China are on the rise, with significant investments in refining and processing. Chinese companies are opening new processing plants in Africa, like the $300 million lithium plant in Zimbabwe. Agricultural exports from Africa to China are also expanding, with initiatives like the Green Lanes, fast-tracking inspections. Kenyan farmers are now exporting flash-frozen avocados to China, a significant milestone after years of effort. Chinese e-commerce platforms are providing new opportunities for African suppliers, connecting them to the world's largest e-commerce market. Platforms like Kilimall and Alibaba's Tmall are boosting sales of African goods through live streaming events. Chinese investments in Africa are shifting from public sector infrastructure projects to private sector industrialization. This shift aims to boost productivity by adding industrial components to existing infrastructure. Chinese manufacturers are setting up factories in Africa to meet the demand of an expanding middle class. China is also focusing on adding processing capacity to Africa's agricultural and extractive sectors. As many African countries face debt crises, Chinese banks are focusing on fiscal stabilization rather than new projects. China's approach to debt restructuring favors repayment extension over haircut relief, as seen in Zambia. China is emerging as a lender of last resort, providing rescue loans to countries in debt distress. The internationalization of China's currency, the renminbi, could help African countries manage foreign exchange pressures. China is signing bilateral currency swap agreements with African central banks to facilitate trade settlement in local currencies. The Pan-African Payment and Settlement System aims to reduce the demand for foreign exchange by increasing local currency convertibility. China's efforts to reduce its reliance on the US dollar are accelerating, especially in light of geopolitical tensions. The share of the renminbi in China's cross-border trade is growing, reaching 49% in 2023. People-to-people ties between China and Africa are strengthening, with more African students choosing Chinese universities. China is supporting African universities to set up Chinese language programs and vocational training workshops. Media and cultural exchanges are increasing, with Chinese cable TV and internet companies boosting Africa's mobile media sphere. Chinese tourists are showing more interest in Africa, with several countries offering visa-free or visa-on-arrival entries. China's economic transition will have significant implications for its international relations, especially with Africa. Stay tuned as we explore how these changes will shape the future of China-Africa relations. China and Africa, a new era of partnership.